Real estate market update for May 2012. I'm Dennis Norman, one of the brokers at Moore, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Let's jump right in with real estate news from St. Louis's best local source of news and information on the St. Louis real estate business, stlouisrealestatenews.com. Here are just a few of the headlines, the recent headlines there. A report on St. Louis foreclosure rate increasing and actually being up about 29% from a year ago, which is not good, but we do want to flush those out of there so that they stop impacting the market. And then an interesting report that predicts that the housing market recovery is actually going to be led by demand by investors for rental property. Rental properties are becoming very popular today. A little bit of encouragement and an article about new home construction, how it's continuing to show some modest improvement. We have a weekly St. Louis mortgage rate update by a local mortgage banker, also with some helpful tips or useful information, and this particular one, explanation on how loan amortization works. And finally, a helpful article about how to protect yourself from mortgage fraud, something that's becoming quite prevalent out there, people taking advantage of people in distressful situations with foreclosures and loan modifications, things like that. Okay, now we're going to jump right into some market data. The first couple of slides I'm going to show here are based upon market data, current market data for the entire St. Louis metropolitan area, which would include a few counties over on the Illinois side as well as on the Missouri side of the Mississippi. And we can see here the median price of $189,000. That's the listing price. We can see the median asking price per square foot's increased slightly. It's at $100 a foot. Average days on the market, 170 days. Other information here, I'm going to skip right on down to the market action index. This is our trademarked market action index, which gives you a quick snapshot at how the market is. Basically looks at supply and demand in the market. And last month this was an 18, this month's at 17, so the market's cooled slightly. Just a reminder, a 30 would be a perfectly balanced market, not favoring buyers or sellers. As it goes above 30 up to a maximum of 60, it would be a hot market, and the higher it gets, the hotter it is, and the more it favors sellers. As it drops below 30, down closer to 0, the lower it gets, the colder the market is, and the more it favors buyers. So we're still in a buyer's market. This is a chart that shows the market action index since it was first introduced back in 2009, and we can see what it's done. So from a historical standpoint, we're up here at the peak of where it's been, and kind of flirting with a new high, but it doesn't seem to want to break out and go any higher than this. Here is median price trend for the St. Louis metropolitan area. I show it two ways. The orange line is kind of a longer term look. It's a 90-day average of prices, so more gradual indication of where the market's going. And we can see over the past year, we're back now to about where the price peaked last summer. And the black line now is based upon a 7-day average, so it's quicker to show a change in the market. And right now they're both pointing upwards, so we'll see what happens there, but that's a good indication. Now I'm going to zoom into the core of the St. Louis market. The remaining slides here are based on data from the St. Louis County 5 market core, which would include the city of St. Louis County, St. Charles County, Jefferson County, and Franklin counties. So we can see here on this chart, the blue columns represent the number of sales, and the green is an average sales price. And so as we look here, we can see April ended up better than April a year ago. April here we had it looks like close to 2,500 homes sold, and a year ago it was down more in the 2,200 range. We can see the peak was in June of last year. As far as prices, we can see the average price is pretty much about where it was a year ago, so with a little fluctuation in between. This next slide here is looking at, for that same 5-county area, the median home sales prices, so actual sold prices of homes, the median, as well as how long it took them to sell. And we can see here the red line is how long it took to sell, the days on market. And we can see currently, well, in April it actually dropped down closer to the 70-day range, so 70 days on the market. And that is still not quite the low of what it's been in the last year, certainly lower than it was a year ago. The yellow line's the median price. We can see median price took a big dip at the beginning of this year. We really saw a lot of just low prices at the beginning of the year and low price real estate selling, and it's continued to climb up out of that. And once again, you can see we're just about where we were this time last year. This slide, this one is less of a indicator of the market and more of a what I call my realtor scorecard. This shows how well a job listing agents are doing, educating sellers, and and quite frankly, how well listing agents know the market, and then are educating the sellers and have the tools and resources to properly price the properties to start with. This is something that's critical. This is something that we teach our agents, and that we practice out there in the field. Having the data like we have available, and knowing the markets like we do in our agents is critical. You can see here overall it's a pretty poor job being done. This yellow line up here represents what percentage of the list price homes sold for, but that was the current list price at the time of sale, so after price reductions. And we can see that's pretty steadily 96, 97%, well, 96, 96.5%. The red line though shows that ratio, or the percentage of what the sale price is of what the original list price was, and this is where it's really bad. We can see back here at the beginning of this year it dipped down to less than 90%. Now it's getting better here. From in March it was about 92%, April's 93%, so this is getting better, but it just shows how grossly overpriced so many of the homes are when they hit the market. This chart here shows the listing inventory in terms of how many months supply there is on the market right now. And we can see here we're at a little under 8 months, maybe 7.5 months or something. And historically here, at least over the last year, we've had a couple of dips down in that range, but this is actually looking pretty good. If the inventory stays down and we keep sales in there, we would expect to see the market action index go up. This is a long-term look, a 10-year look at the median list price and sales price for the 5-county area. The blue line is the list price, and the green is the sales price. And we can see here we're getting a bigger gap as list prices are heading up. So we got some, once again, we've got sellers that are not being educated properly and are coming out on the market overpriced because sales prices are going down here. But we can see the actual sales prices are down here considerably lower than they were 10 years ago. So we've really been impacted in the market. And there you go. That's a quick glimpse into just a piece of the information. We've got kind of a quick overview of the city area. You'll see here, there I am, and my business partner John Williams and Nick Seapack were the three brokers at Moore, and us and our staff of agents are here to help you, whether you're buying or selling or looking to buy investment property. You can see here we've got all sorts of charts and market data that you won't find anywhere else in St. Louis, and the ability to interpret it and apply it to your situation. And we can bring it down to your neighborhood level too. What I'm doing here is a kind of a high overview. Up here in the upper right hand corner, you see a little snapshot of a monthly electronic newsletter we put out. I'd suggest you consider subscribing to it. It's free. It's very informative. It's got a lot of real-time market data in it. It's got some real estate news. It's got lots of resources in it. You can sign up for it on stlouisrealestatenews.com in the upper right hand corner at stlouisrealestatenews.com, or you can get that and a whole lot more of this at our website, mo-re.com. That's mo like Missouri dash or hyphen re.com. We've got this video and other videos available on podcast from iTunes. You can go to the iTunes store and search for St. Louis Real Estate Market Update. Look for the arch there on our chart. And you can subscribe to it. You can also get this on our YouTube channel at youtube.com/More Realtors. Our Facebook page, facebook.com/More Realtors. Actually, I'll make it simple here. Here's two QR codes. One on the left, you can scan it. It'll take you to a site with a bunch of resources for buyers and sellers. The one on the right we'll get you our St. Louis real estate market forecast for 2012. This is the last month, and we'll leave it out there. This is May, so it's the farther we go here, the less of a forecast it is. So I'll leave it out here this month, and then that'll be it. Here's our legal disclaimer that when you're really bored, you can read. And that's it. I'll take you back to the QR codes here in case you didn't get those. And thank you for joining me. And anything we can do to help you with your real estate needs, just give us a call, 314-542-9440, or my direct line, 314-332-1012, or hit us on our website, mo-re.com. Thank you, and until next month, God bless you.